Are we live? Are we live? Are we live? Are we live? We are live.
I think we're
All
live.
right.
Can I share this in my network, Justin?
You can share this in your network. It is currently on the Backers LinkedIn.
How do I do that?
Anyways, guys, this is episode 1, if you will, of Backers Live. Myself, Justin Fox, Alan Wozni. Welcome to the show. Hey there, hi there, ho there. We're going to be doing this on a daily basis going forward. We're going to be having guests on. We're going to be talking a little bit about backers, some of the issuers that are on the portal. You're talking about some of the aspects around backers and what we're doing and what people are doing.
Let's talk about what are you doing as backers?
What are you doing as backers? Right? We will be talking about that in 1, 2. Okay. All right, we are. So anyways, let's talk a little bit about backers. So what is backers? So backers is twofold. It is a funding portal, a registered funding portal with the a couple of the securities commissions.
But you can extend that to all across Canada.
100%. So currently BCSC and the OSC, Ontario and BC. So we're registered funding portal, which enables us to facilitate retail investors investing in private companies. Essentially, a private company can come to our portal, can list their shares for sale to the general public, retail investors. They can raise up to $1.5 million. And Bob's your uncle. That's pretty simple.
So why would someone use backers versus other means of raising funds? Let's go right to that, because Justin, you and I have been talking about this for a while now.
Cut to the chase, as they would say, right? Why? Well, there's a lot of reasons why somebody would want to use backers. I think I think they're all very important. But hence the name of our business, backers. I use the term, and I don't use it lightly, but I say this: fuck investors. What you really need are backers, and what that does is it differentiates between somebody purely there for money, looking for a 10x return, and somebody that's there to support your business, be a part of your business. They're arguably your clients, your users, your fans, your supporters, your followers, your community. They are now both following and supporting and appreciative of what you do and have that affinity to what you do, and they're loyal to your business if you are selling a product or service, but also they are invested in your business. So it's all of those, combined. And that's, this is much about loyalty as it is around funding. So, the problem that we're initially solving is obviously that it's extremely difficult. We're kind of rewriting our own deck as we go right now, as we kind of evolve and things kind of evolve. And it's really extremely difficult in the modern world for entrepreneurs to get funding, to get eyeballs, to get VCs, attention to invest in their business, to get bank to lend the money, to get some, third-party lender with, extreme. We say, banks say no, lenders want your firstborn, and sharks can smell blood. And those are, and if you even can get a shark to smell your blood, I think the stat is 0.5%. That's less than 1%. 0.5% of all entrepreneurs or startups will get VC funding. So that's 99.5% of startups will not get funding, external funding from VCs. So I was going through a bit of a, research on kind of a whole bunch of things, as we always do. We kind of reading from literature, from, the globe. And one of the things was, I think it was like 84% of startups are bootstrapped or self-funded. And if you don't have the funding to do so, you're not going anywhere, right? And so there's a lot of little businesses people can start. There's a lot of things that can be done inexpensively, but a lot of these larger innovative ideas, we were just on, with some guys there earlier, right? Talking about, biomedical, science and all these different, kind of studies and things that need to be done, and capital intensive, businesses. And it's very difficult for them to get funded. It's very difficult for them to not only not get funded, but also to grow their business, grow their.
Well, and so that's to the point. So just to that point, growing their business, looking to go to the journal of what is a JAMA, the journal of a publishing something to advertise to that community, which is great. But depending if who's going to pick up that magazine. I used to, the CPA magazine, I'm an accountant. So I may or may not look at this month's edition. So if I don't see their advertisement or their announcement in there, it's really just going to be a wasted effort. So what would you say to that? How would you build a community in life sciences or biosciences, Justin? How would you help them, back them?
Well, I'm actually doing it right now. I'm about to literally go into LinkedIn and share this video as we are live. I'm going to share it from the backers page into my own page.
Yeah.
So that people can see.
Okay, so I'm
on my LinkedIn
live. Let me go to my LinkedIn as well, so I can see how this works. Because this is actually pretty innovative.
So here I can actually see if I can share my screen while we're doing this. So let's. So
I'm going to Justin for the benefit of the two listeners or viewers out there. I'm going to go to Justin.
Kind of,
okay, so here we are.
It's like a portal of a portal of a portal. But yeah, literally, I'm just going to share the screen, post it. I've got 24,000 followers on my LinkedIn, so it's literally live on our backers LinkedIn.
Why am I not seeing? Oh, here we are.
Wait. It's on the backers LinkedIn, and now
I'm not seeing this.
You're not seeing this, eh? Anyways,
no, because I got to go to your page. So I'm on your page now. There we are. So I'm looking.
No, not my page. Go to the backers page.
I'm at Justin Fox.
No, yeah, I just shared it. But if you go to the actual backers page,
okay,
right, backers network page,
yep,
you can actually see it. So a lot of what we do, is content creation. And we've been talking about this for a while. It's really about content creation, creating content. But as a business, I think all businesses need to be content creators first. The way the modern world works, and I mean, obviously, Backers is a Web3 based platform. We are taking the blockchain tokenization aspect of the world and bringing it to retail investors. But if you look at disseminating your message, there's so much clutter out there. So you need to be able to really hone in, communicate with your target audience, with the people that you service, the people that you look to provide, value to. You really need to be able to have that conversation with them wherever they are, right? And that's obviously on social. That's, podcasts. You do podcasts. You've got 360 plus episodes of your.
I've done 380 episodes to date.
There you go. Yeah. Exactly. Right. So, I did almost a somewhat of a daily show. I did about 125 episodes through sort of 2020 into 2021, called One Take, really just kind of engaging with entrepreneurs and talking with people that are doing things out there in the world. And so it's really about, connecting with the people that are, in your community, right? And identifying first who that community is, what their struggles are, right? I saw something that's like problem solution, right? You have a problem, they have a problem, you need to be able to provide a solution to them, right? So it's really about identifying who or what the problem is that you're trying to solve, who has that problem, and then trying to, connect with those people so that you can actually solve that problem and provide value to them. So I think from a backer's perspective, the biggest problem that we solve, if there was a problem, I'll solve it. Check out the hook. Well, my DJ revolves it. It would be funding for early stage startups. But more than that, it's about supporting them in a much deeper way. It's more about creating almost like a business in a box, whether it's marketing, whether it's legal, whether it's development, tech development, things of that nature, and creating, providing access to those things, potentially at whether it's, deferred compensation or deferred costs, that we, our whole factoring model, things of that nature, so it's really the funding's one aspect, and that's a core aspect, whether it's the equity crowdfunding, whether it's the deferred payments or the lending, if you will, also building out some different funds and things of that nature.
But Justin, let's talk about that, because you and I talked offline, and you watched a documentary about the social capital.
I think it was called Eating the Rich, the GameStop saga.
Yeah.
Saga.
Whatever.
Saga. Anyways, the GameStop
Mississauga.
saga.
It's Mississauga, so you
but
got
it's not SAU. But anyways, it's the GameStop saga. I know. But anyways, So the GameStop saga, yeah, and it's all about this wave of retail investors. So prior to 2016 in Ontario and Canada, and prior to sort of the early 2010s across the globe, private early stage companies, or all private companies, were restricted, at least in Canada, to 50 investors. They can now go out using the backers, portal. They can now go raise, money from retail investors. And so this GameStop, saga of this wave of Wall Street bets, this wave of retail investors, impacting the broader markets and going up against the institutional, in this case hedge funds, and VCs.
Yeah, Wall Street bets, right? So Wall Street bets, put it on Red Deer.
Reddit, yeah, Reddit. Exactly.
They came to Red Deer.
So Wall Street Bets is a Reddit community. I think has grown to about 10 million, but at the time it was a few 100,000, maybe a million or so people. And what they were able to do, it was all about people posting their experience with investing and different ideas and thoughts and kind of thesis on different stocks potentially. And what ended up happening, and I'll go watch the Netflix special if you're so inclined. But what ended up happening was somebody wrote a post about GameStop, which was the stock, outlining their thesis on why they thought it was a good investment. Right? It had been declining. It had been whatever it had been doing over a period of time, and they saw that there was some value. They saw that. I think the biggest thing.
Well, the shorts, they had more shorts than the actual stocks.
Ever 140% shorted, right? Yep. Exactly. And so it was like there was this, they saw that if they could pump it, they could start to liquidate some of these shorts, which would force a greater pump. And that was sort of their thesis, at least part of their thesis. And there was this other guy that had bought in, anyways, not to get it too much in depth with it, but they saw that they could be, David versus Goliath, right? And that's sort of the story of the little guys versus the big guys. And that's kind of what Backers is all about. It's all about your community supporting your business, your idea, your vision, your innovation, and really helping to get it off the ground, right? And
okay. So you just talked about the community. So there's the comment I had. The exchange I had the other day, we can talk about that in a second, but in terms of, this is normally Justin for, B2C, but I'm a B2B business. So what's your response to that?
What is my response to B2B versus B2C? So I think, very simply put, this type of model, this type of funding model is beneficial to anyone, that has a need for more clients, more customers, more users, more fans, a bigger community, right? I mean, as we said, we were just speaking to somebody just prior to this call, talking a little bit about community and community building, arguably a not so B2C type of business potentially, right? Very much almost in the institutional realm, medical space,
very much,
right? Yeah. And in sort of the educational or whatever you would call that realm,
research,
right?
PhD,
all
scientists,
of that, exactly, right? Yeah. So it's really a question of, I would say 99% of businesses, whether they're B2C, B2B, B2B2C, whatever it is, they have a need to grow their influence, their sphere of influence, right? And if you look at people, influence and your ability to get your message out there is the new currency of the world, right? And if you don't have eyeballs on what you're doing, nobody's going to care, right? If a tree falls in the woods, does anybody hear it? Arguably in today's society, the answer would be no. Nobody hears it. It didn't fall, right? So you need to get your message out there. You need to be able to communicate what your value proposition is to your community, and you need to be able to spread that message and spread it like wildfire. Knock on wood, as I sit here in Vancouver with wildfires spreading everywhere. Yeah. You need to be able to disseminate that message. So building community, and if you have a need for somebody to buy your service, buy your product, participate in whatever it is you're doing, be a fan of your whatever it is, part of your community, a follower, Backers is a ideal solution to not only get funding for your business, but also to inspire loyalty and deepen the engagement with that community, with your customers, with your clients. Loyalty, you look at loyalty and loyalty programs over the past 20 years or so since they started popping up, maybe even longer at this point, 20, 25 years, they were a plug-in or an add-on to your daily activity, your daily business activities, where you would basically incentivize people to continue to utilize your service or product. Now that they're invested in your business, there's no better incentive than the growth of your business, where they will see their investment grow with said business, right? So as much as it's a funding model and mechanism to help fund your business, it also becomes your biggest probably source of loyalty, your biggest source of referrals, a biggest source of just that community building and that community growth.
It's insane though, Justin. You're talking, grassroots. Literally, if you take the Reddit model, that was the community in the investment community. Now you're extending that to the social, it's almost a social fabric that people have taken for granted on their personal lives, but they don't see the connection to the business. And I think that's a great example. The backstop or GameStop or GameStonk, as Elon Musk like to call it.
This stock was there. I think one of the hashtags.
But he wrote stonk. He wrote donk.
Elon Musk put GameStonk. Yeah, exactly.
Yeah, stonk. That's it.
There was a bunch of there was obviously in that scenario there was a series of things that kind of led to it getting the notoriety, and eventually it had billions of dollars flooding into it. And
absolutely,
if you ask me, it was kind of crazy and very shady what ended up happening.
My daughter. So to case in point, my daughter her boyfriend was up at University of Alberta, graduated last year. In his math, whatever it was, or fourth year accounting course, they talked about that exact case. I don't know in the context, but in terms of how to value that in GameStop, they literally put that as a case study during this is real. Stuff is real.
Yeah, real life, real world playing out right in front of you. And so I kind of watched it. I didn't invest in it, but you look at it, and I didn't know the exact timelines of how everything played out till I watched the show. But it's interesting, and this is kind of a an interesting point to make, I think. If we kind of go away from what we're talking about specifically to backers, but more to retail investors and to the kind of if you will, centralization of some of these things, right?
That's right.
Is Robinhood was the app that primarily people I assume were investing in GameStop on, right? They're using Robinhood.
Well, Robinhood,
and Robinhood turned off the buy button. Right?
They had to. They couldn't handle the orders. They couldn't handle the volume.
No. That's. I think that's.
I know why.
That's the BS, right?
I know why.
That was the BS, right? It's and you watch that show, and so go watch.
They couldn't handle the cap. They didn't have the capital.
Well, they didn't have the capital. That was the the line that was used is the banks are calling in their what do you call it, capitalization, right?
Yeah.
And so they weren't able to keep selling because
it wasn't. But they used the technical. It was a technical glitch. They tried to use that.
In essence, they turned off the buy button, and what ended up happening, obviously, is some of these large hedge funds that had shorts on it. Obviously, were able to save. Went from, I think, I forget the numbers, $500 at one point. In one day down to like 160, just because nobody could buy and everyone just started selling. And so that, that's kind of, market manipulation, I would think, and things like that. The retail investor does not appreciate things like that. Right. And that's often the case. They are often market manipulated out of it. Right. And if you watch that GameStop, it's all about people have never seen, at least the institutional, right. And these VCs and these hedge funds, they didn't believe that it was possible. They've never seen, a kind of unified, retail investor base that was able to shift
the little person.
That's
the little person,
guys, right?
Who could the little guys or make a gender. The little person could not participate normally.
The little they them, exactly.
But to Justin, let's go back. Could you imagine
the little people?
You mentioned littles. You and I have talked a little bit about I've heard you've talked about this. If Shopify. If you could have gone back when Toby Luckey was forming Shopify in 2005, 6, 7, when he was building websites for his snowboard.
Yeah.
He wanted to sell snowboards online. Imagine if you could have, and people were coming to him, can you build that for me, Toby? That's his podcast. He described that on the Masters of Scale podcast. So not 2015, 16, 17, just before they went IPO, but when he was building, building community at a time when the iPhone didn't exist. The iPhone.
No, for sure. I mean, so I remember I worked for a hospital in the finance department a few years ago, and one of my roles was finding revenue generating opportunities for the hospital, right outside of OHIP. Sorry, that was literally my role. And one of the things that I did was worked with the what do you call it? The auxiliary gift shop, right? So it was the gift shop, and this is, I don't know what, 2012 maybe, something like that. And we looked into putting together a Shopify store, and I ended up building them a Shopify store in 2012. But the point is not to that. The point is that yes, prior to this, to a platform like Backers, and there's others out there, but prior to platform like Backers, crowdfunding, equity crowdfunding, the retail investor was literally restricted from investing in early stage private companies.
That's right.
or any private company. And that is often a very lucrative investment, right? This is where, I use the Facebook analogy because I know the numbers and I've kind of done the background. So I don't know exactly the Shopify, but if you look at something like Shopify, I mean,
Spotify,
them,
Sweden.
Right?
But we did talk about Magnus.
We did with Magnus, exactly. But if you look at the Facebook, specific numbers, 2012, they went public, I believe. If you had invested in them in 2009 when they were private, right, versus 2012 when they went public, between 2012 and 2019. Now, obviously, things may have changed over the past couple of years, but up until about 2020, that investment in 2012 had about a 7 or 8x return, right? So you're looking at, your $1,000 is now $8,000. Your $2,000 is now $16,000 or something along those lines, right? And now that same $1,000 though, if you invested it in 2009, right, you're looking at a 77, almost 80x, right? So that same 1,000 just a couple of years earlier, obviously higher risk, a little higher, obviously comes with higher reward. You have an 80x. So that same 1,000 a couple of years earlier invested in an early stage private company like Facebook now returns 80,000 versus when that same company went public, you've got about an 8x at 8,000. So that's the difference from investing in early stage private companies. Obviously high risk, obviously high reward. You've got sort of that, you've got to mitigate your risk with the reward side, but the potential and the opportunity is there. And so that's really where I see from an investor standpoint, you see this wave of opportunity where now they have literally been frozen out from investing in these private early stage companies, and they can now participate in this, often lucrative space. And this isn't private equity in the sense of just investing in private companies and private equity funds. This is right. Early stage, early startups, grassroots, ground level. You're helping not only get them and their vision off the ground. We talk about the first mile of funding, right? And that's sort of that getting them, through the gate. And, it can get into the whole greatest hockey player analogy and all that shit. But literally, it's from an investor standpoint, it's an opportunity that has never existed prior to now. I mean, this is the evolution of retail investing. If you look at our deck, and some of the things we've got out there, the evolution of investing has gone from, only the rich, only the wealthy to, you got into like mutual funds and things of that nature where they're consolidating people's money into sort of different, now you have access to the markets, the broader markets. Then you get into some of this, early sort of 2000s, you get your like TD Waterhouse type, accounts where you can, if you have certain amounts, you can start to invest. Now you get into things like Wealthsimple, Robinhood, all these different companies, Wealthsimple being a Canadian company or Canadian version, if you will, kind of a Robinhood. You get into
Questrade
and you get in these ETFs, and now you've got, low fees, exchange traded funds, things of that nature. These are all investment opportunities into public companies, publicly traded companies on the public exchange or on exchanges, right? But now the next wave, if you will, the new opportunity is to take that one step further and to be able to go out and invest in these early stage companies, be a part of their success from day one. And that's, I think, it's revolutionary. It's, you look at the ICOs in crypto, right? Initial coin offerings, a lot of these ICOs and a lot of them, will go by the wayside. But I think what we're doing with backers is completely different. It's taking that ICO craze and applying that same technology of tokenization to actual assets, right? And, we're probably going to cover everything that we're ever going to talk about ever in the next, 30 years in this call all in one, and we can probably break down each piece. But tokenization, every asset in the world, I used to say this 5 years ago, when we first launched backers and we're starting to go down this path, every asset in the world will be tokenized. That is the future, right? And so we're part of that. We're tokenizing private equity, private shares, for retail investors to be able to invest in it. And that's kind of, again, a wave of the future. So it's now an asset-backed security, an asset-backed token, a security token, crypto security, whatever it is you want to call it. That's what it is. That's what we're building. And that's what Backers is helping to bring access to the masses, so that the masses can now participate in supporting these entrepreneurs. That being said, I also, to the other thing I just said, greatest hockey player ever live. This is my rant. Day one of Backers Live is going to be me ranting, dumping.
So,
all
folks,
this shit.
for those of you out there are going to say, and I mentioned it earlier in the call, we had Maurice Rocket-Richard, Wayne Gretzky's been up, Pierre Lemieux, Crosby, Sidney Crosby, and literally Joe Sakic. I just watched the 1996 series with, so there's some real great hockey players. Gordie Howe is my favorite. Justin, take it away.
So the question is, who's the greatest? This is the analogy that I use from an issuer or the entrepreneur's side of things. Why is this important? Not only from their perspective, but from the broader society perspective, right? Why is this important? Why is it important for for innovations to succeed, right? Why is it important for innovators to be given that opportunity to succeed? And so the analogy is, who's the greatest hockey player to ever live? The question is, the analogy obviously, is who's the greatest hockey player to ever live? And the question is, is it Wayne Gretzky? Is it Gordie Howe? Is it, whoever that might be, Bobby Orr, Connor McDavid, depending on your era, right? You could say Sidney Crosby could be thrown into that mix as well. Mario Lemieux, who knows? But the real answer, and the answer to that, is no one knows who the greatest hockey player to ever live is, because the greatest hockey player to ever live likely didn't play hockey. Because to play hockey, you have to arguably come from a cold country, have access to ice, right? Skates, equipment, have access to practices, coaching. Your family has to be supportive and arguably have money to fulfill this over a sustainable period of time to get you to that level. And 99.99999% of the population that's ever lived on Earth has never played ice hockey, right? Has never played hockey. And so similarly, the greatest innovation or innovators to ever exist have likely never even started, have never even come to fruition, have never even been given the chance or opportunity to do so, right? Because again, to be an innovator and to create an innovation, you have to come likely from a wealthier country. You have to have the time and effort and energy to put into it without being, driven to work and, having to do whatever you do just to subside, right?
Yeah.
You have to have access to capital. You have to have access to mentors and people and just technology and the tools to do what you need to do. And 99.99999% of the population has not had that access globally. And not just globally, but even in North America, Canada, the majority of people don't have access to that. Not only do they not have access to it, they don't even think that they have the possibility. I mean, I watch, shout out to Satish, right? Satish and Schoolio and looking at, go watch his content. I mean, it's all about understanding that there is an opportunity out there and that you can jump at it and go for it. There's a lot of people that don't even know, where to start what they need to do, how to get there, where, there's so many unknowns. So while we say 0.5% of entrepreneurs get funded by VCs, there's probably that 100 or 99.5, they probably represent 0.5% that even get started. There's probably 999 that don't even get started, right?
But Justin, one of the first podcasts we mentioned earlier about Gary Vaynerchuk. One of the very first podcasts, he says, I want to go. He says, you go to an old folks home or a senior citizens home when people, and even end of life or whatever, assisted living, whatever you want to call it. He said, there's the biggest regret. You can see the regret in their eyes of not having done something. And he said, Gary Vaynerchuk said, I want to form an incubator and go there and find out what are those ideas you didn't take off. So and foster that, enable that kind of an environment. Because you know what, I've had on my podcast, you've mentioned the 380 podcasts. Is this we mentioned Red Deer earlier, jokingly, but no word of a lie. Little creators. He's probably on his third or fourth business. He was 14 in his very first business, and that was reselling goods from Walmart because the candy machine or the vending machine didn't have enough the selection. So he went and was selling out of his, he called making bank out of his lockers. So the ideas are everywhere until they die in the grave with the regret.
Exactly. And that's, the biggest regret is often not doing something, right? Not having tried, not having gone and pursued whatever it is, right? Whether it's a passion, whether it's, a person, a lot of times people regret having, lost the love of their life, right? Or not having pursued potentially or tried hard enough, in certain aspects, right? It's the same as with opportunity in business, right? Not having tried to go out and better themselves. And, I look at the world we live in today, this whole, quietly quitting and quietly firing and all this, BS, right?
Well, the big resignation, the great resignation.
Exactly. Quietly quitting, the mass resignation, big resignation. I look at it and this, we can talk again. I said this live stream is going to touch on everything, but decentralized autonomous organizations or DAOs, right? Whether it has to be completely that, I look at something like a Backers platform where now if everything's tokenized and everything has value and everything can be interchanged with value easily and digital assets can flow freely, right? And so you can, literally currency becomes anything that has value, right? Can be freely traded, right? What if now I could provide my service, my expertise, my work, if you will, right, to an organization, and in return, I receive the value of my work in the form of equity in said business, right? And now that equity can be transferable to something else of value. So if I want to literally, it sounds crazy, I want to go to the grocery store, I can. Now, if obviously a validated, valuable asset, I could literally, again, this is not happening today. I could take my shares, my BKRS tokens that are representative of shares in Backers Network Inc., which represent the ownership of Backers, Class C non-voting common shares in Backers, which will be for sale very soon again to the broader community as we work on some things that will allow us to raise on our own portal. So stay tuned for that. But I will be able to literally, right, take that BKRS share that might be worth whatever it's worth at the time, and it'd be roughly 20 odd cents at this point, but let's say it's worth $5. I can take that one BKRS share digitally, transfer it to Sobeys or Shoppers Drug Mart, or whatever, and I can literally pay for bread with my shares in BKRS or Backers, right? That's the interoperability long-term, where a DAO now, decentralized autonomous organization, that's literally paying you, or you're being compensated, because I like the term compensated more so, you're being compensated in equity in the business. Yeah. Now, what does that do for you as the contributor to that organization, right? You're no longer an employee. You're no longer it's no longer a job necessarily. You're now a contributor to the growth and the value driving of that business. And so now fuck all this resignation and this, this quietly quitting, now you can literally, feel like your efforts are going to improve the business. So now what you'll have is, rather than people having one job they hate, they're 9 to 5, they have to go there, they're forced to go there every single day, and if they leave, that's it, right? Now you literally will have 15, let's say, I'll just throw a number out there, arguably hustles. It would be sort of in using side hustles, or each one of them is what you do. And let's say you spend 3, 4, 5 hours on one each week, and you have 10 of them, that's your 40 or 50 hours
but to
a
that
week,
point,
and you're being compensated in equity, and you value your input, and you're no longer just sitting there looking at, the clock, punching the clock, like, fuck them, they better just pay me, I don't care, I'll put in my minimal effort and I'm clocking out. Now your efforts are going to be tied to your own intrinsic value, right? And that's or the value that you're putting into that business. Intrinsic motivation. Sorry, apologies.
No, but to that point, and in terms of how you compensate that, how you monetize that, how you get that on, before they get there, the 14, as you just said, the 14 hustles or side hustles, listen to Bloomberg, the authoritative financial markets. Listen to a Bloomberg podcast a couple weeks ago, and I'm not sure who was the speaker, but the speaker said, today's youth, they're not going to enter the workforce. They may never hit that labor. They were talking about labor participation and so forth. The Minister of Labor he's from Boston, of the U.S. The Minister of Labor, or the Secretary of Labor. He's from Boston
in the U.S.
He's got a good, solid accent, Boston accent. But the point was, he said, they may never enter the workforce.
Park the car in the yard.
It doesn't matter. But he's that's a different commercial. That's a commercial. But literally, he said that you won't have the participation rate. So what are you going to do? Those kids who grew up with iPads and the digital world, and they want to be influencers, they want to be a YouTuber. They might, whatever their side hustle is, like I've said, my Clint Cadio, who's in Red Deer, he literally, not Robin Hood, but Red Deer. Or what was it? No, but it literally, these are not Reddit, but Robin Hood, Red Deer. But literally, these kids aren't going to enter the workforce. So they'll be ready for you, Justin, to put them on their 29.
Well, this is it. You look at, and this is sort of, we're talking way in the future. We're not talking what we're doing right now. What Backers does right now is obviously we're a funding portal and facilitates, equity crowdfunding. Companies can raise up to 1.5 million. But what we're discussing is the concept of a DAO and how the evolution of what Backers is doing will play into this whole Web3 model. And which is that it's value exchange for value exchange. Right, it's purely a value exchange. So I'm as a Gen Z, Gen Alpha. I mean, my kids are Gen Alpha, right? They're going to be this next wave, right, after Gen Z, right? And they will not be working one job 9 to 5. Period. I mean, I will go and I would be like mind-numbingly surprised if in 30, 40 years to even 20 years, the average person is working some sort of 9 to 5 job. I would think that would be outside of the norm. Maybe highly skilled, highly very specific, maybe medical practitioners or things of that nature might be, in that type of singular role or that's their main role. I think the majority of people will be providing value to multiple organizations, whether it's through the role as an influencer, whether it's through your skills and capabilities, and it's micro jobs or micro ability to kind of, and so they will be compensated in that equity, because I think when they're compensated in the equity, there's more buy-in to the longer term success, right? And the output will represent that. We'll showcase that.
That'll be the gig economy on drugs. Like I think it's the next level of the gig economy, right? It's going to be micro gig being sort of macro, but now being micro gig. I don't know if you want to call that one. We can call that.
Exactly, the micro gig. So I mean, it is, and that's, and you'll have your expertise. You'll have people that do different things. Everyone will be arguably self-employed. They will be an autonomous individual. Yeah. Right. And they'll be working as part. And this is where you could probably have DAOs where you've got a DAO could be throwing ideas out there. Anyone watching, you could have a city that's a DAO, and that city DAO.
There is a city. Okay.
There are city DAOs.
There is
right?
a city DAO.
I know there is a city DAO, but And what you could do though, beyond what CityDAO is doing, so those of you that are at CityDAO watching, you could have all of the different roles that would arguably be in a city, in a community, right? And they could be all participating in all these different roles. And so if I'm good at this, I'm going to help here, and I'm going to be compensated, value for value. I'm going to be compensated based on my expertise and my input accordingly, right? And then I might go over here and use this other skill set I have and also then be compensated for my input. And obviously the community at large values or gains value from my input, right? And that's kind of where I think I see things going, right? CityDAO, theirs is a slightly different model, but there is a CityDAO. You're right.
Well, CityDAO raised from the community. They raised roughly $5 million or $6 million from 5,000, their crowd, their community, to go and buy a piece of land in Wyoming. I wanted to get this up here because they literally took it to they bought his idea. The founder, or one of the founders, is Scott Fitzsimmons, I think it is. He literally wanted to raise funds to buy a city or a way to look at the city. So they raised CityDAO. But the point is, it's near Yellowstone Park. My point is, their community got them $6 million to raise, and they went and bought a piece of land. You're right, Justin. The way our communities are today, smaller. It's smaller, micro. You really go micro to the street you live on. What's the name of your street that you grew up in? Do you remember the name?
I'm not going to say it on here because it might be a.
Okay, my street was called.
It's an yeah.
Van Horn Crescent. 149. Mine was 149 Van Horn Crescent. Right, I'm just saying.
Isn't it one of your what do you call your questions for like getting into your whatever, right? Trying to change passwords. Like, what was the your first
okay,
whatever,
maybe that's it, but
the first love or whatever. Yeah. Anyways,
you shouldn't be using it.
Yeah, find a better passphrase. Anyways, but yeah, so this is the concept though. It's really about smaller communities. Oh, did I just freeze there? Yeah, I froze. But anyways, it's about smaller communities. It's about contributing value for value. If you contribute, you receive value. If you don't, you don't. Right. And those that contribute are able to receive greater value for their inputs. And that's really where you're going to see this kind of go. And that can be at a broader level, at a national or global level, or it can be smaller in more of a smaller community level. It can be in a business itself, and then it can be at multiple businesses or interoperating kind of entities, if you will. All of that can be done together, right? And so it's kind of building or bridging this kind of digital value exchange, digital asset value exchange. Not talk too much about the metaverse, but the metaverse, I mean, I've heard, you've got NFTs, you've got things of this nature where you're now creating value in something that's only actually in the digital realm, right? Obviously NFTs can be associated with or tied to, physical tangible assets as well. You're going to start to see things like land, registries. You're going to start to see things like deeds to a house. All of these things, your ID, all these different things are likely going to be transferred digitally on the blockchain. As I said, everything, there's predictions now by 2030, everything will be on the blockchain, right? Every asset will be represented at least digitally on the blockchain. And so that ability to transfer it back and forth will be super easy, economical, and you talk about the metaverse. I mean, I'm not sure where my opinion lies on that just yet. The verdict is still out, but you see it already. People are playing games, video games. They're exchanging skins. They're earning skins. They're getting all these different things, right? Yeah. Again,
but let's go to the point. So you want to talk about registration on the blockchain. When I first learned about ERC 721, the NFT or non-fungible token, in Ethereum, Chris Dixon from Andreessen Horowitz in 2018, he was on a podcast talking about how you can take your earnings from gaming, bring that from one game to the next, and take the skins with you, your whatever you've earned. They've been talking about it for a while, and Andreessen Horowitz and Chris Dixon himself, they're one of the biggest proponents of and investing in. Talk about cap tables there, Justin. Andreessen Horowitz is in almost every cap table these days when it comes to blockchain, Web3, crypto. So it's incredible. I heard that 3-4 years ago when I first started looking at blockchain, about that bringing out of taking deeds and when there's tangible ownership of cars and land registry. That's ERC 721, or at least the non-fungible token aspect, not the NFT pictures and 69 million that
that's
people sold
like that.
People sold for 69 million. One picture. One.
Well, it was a culmination of thousands of pictures in one representation. But so I mean, I'm not knocking. I mean, that's
I'm not knocking. That's art. Reality. I mean, that's reality.
You could argue that art is a money laundering kind of realm. But anyways, the NFT space, there's so many more applications for NFTs than just a squiggly picture of a monkey, right? Or ape or whatever, right? So and what that really represents, and if you talk about NFTs and arguably the tokenization, you mentioned A16Z, right? Andreessen Horowitz, in the cap table, it really represents, it's the tokenization of the ledger. And a lot of people, a token in the sense we're talking is not a physical circle little thing that you put into a machine. A token is essentially a digital representation, usually some sort of cryptographic, whatever length of digits that represent something else that so it's a representation of something, and you can use it in security tokenization, in from a security standpoint, right? And when I mean security, like actually like cryptographic security, not being able to hack or unhackable, it's a representation. And so that token now can be traded easily without being hacked, right? And so that's the whole point of it, is that it can now be traded arguably autonomously or non-autonomously to other people without it being hacked and the actual asset that it represents being stolen, right? And that's kind of, and that's probably a very layman's term of putting it. And if I'm wrong, those of you out there, please correct me. But that's a simplistic way of looking at it. And so these NFTs, non-fungible tokens, are simply a singular representation of a digital or real world asset, just on the blockchain, right? And the blockchain is immutable, transferable. It's transparent. That there's that security built into it, and the blockchain is simply a ledger of who traded. So went from here to here. Buyer, seller. Trader, non. This is the originator, and this is the receiver, right? Sender, receiver. And so that share ledger, if you will, on a cap table can now be represented. Here are the 86, here are the 860, here are the 86,000 shareholders, here are the 8.6 million, shareholders of that company on the registry currently. If one sends their token to somebody else, the cap table will be updated instantly, automatically, right? And the visibility to regulators, let's say in the case of shares, is instant, right? It's done. It's recognizable. It's seen. It's on the blockchain. They can go through, see the historical of all transactions, and validate that this is in fact who should be the owner. This is the point. All these different things.
You continue to. I want to share. There's a from IBM.
No, and by the way, I don't know shit. I'm just going off of my very superficial, non-technical kind of understanding of all of this. But go ahead.
I wanted to share, if I could. There's from IBM Maersk. Back when I first back to 2018, they had a video. It was a 3-minute kind of a explainer video showing how the blockchain was used to move some flowers from Holland down to the somewhere. And I'm like, literally, if I could tee that up, it would be really valuable and share, Justin, because it kind of explains a lot what you just said. But this is made 3-4 years ago. It's an older video. I don't know if I can share my screen, but it's a really good 3-minute video, and maybe I can just share for 2 minutes of it. Would that work? Or I'll send you the link. Let me send you the link.
Say that again. Where you want to share it on here? I don't know.
No, I'm going to send you the link, and you can share it. Okay?
Is it a MP4?
We
can share it another time. So, anyways, we'll
YouTube link. Well, okay, it's a YouTube link. I just sent you the thing. It's not a file. It's a link to YouTube. Maybe you can share it. I just sent you the file. This is, I think, is explaining some of that what you just talked about, but it's in a different level.
Yeah, I mean, obviously, I'm not, just for the record, I mean, I'm not a data scientist. I'm not a expert on everything that is crypto and cryptographic technology, and I'm not an expert on all blockchain technology. I understand some of the business use cases of it. I've spent probably the past, let's call it 6 years, diving into how blockchains work. I've coded up a few blockchains, coded up some smart contracts. At Backers, obviously, we have a security token smart contract. So using the basis of the 1404, you talk about ERC 721. We use the ERC 1404 security token framework, which restricts transfer, restricts who and how a token can be exchanged, if you will, or movement of that token to those that are eligible to participate, let's say, right? So retail, non-accredited versus accredited. So that's kind of this is the evolution, right, of where we're going with Backers, right? It's creating a value exchange on the blockchain. And let's just touch on everything. You look at governments, and I said this 4 or 5 years ago, every exchange, every stock exchange, every commodities exchange, all Forex, all currencies, current currencies, fiat currencies will be on the blockchain. If I said that 5 years ago, I often got laughed out of the room. You look at, we've got some stats on some of our, I don't know, 80 or 90% of governments, and this is a year and a half ago, 2 years ago, we're looking into CBDCs, centralized central banking digital
currencies. Yep.
Right.
Yep.
Where they're literally going to move their fiat dollar, the USD, the CAD, the CAD, whatever it is, in onto the blockchain. Right now, whether that's a good thing or a bad thing, I'm not going to, this isn't this is not here for that debate. We can have that discussion, and I'd love to hear people's thoughts on that. I'm not sure, again, where I stand on that. But what it is going to do is it's going to digitize the dollars or the currency. And what's going to happen is they will then potentially have control over aspects of it. And you talked about the non-autonomous aspect of it. So they'll know who's got it and whatnot. So that's getting into whole conspiracy theory type stuff. Don't really want to go down that path just yet. However, that is happening, right? And that is going to happen. And that is, if you can build value exchange where you can now exchange the value of that for the value of something else that isn't necessarily government controlled, that I think is a.
Well, let's go back. Let's go to the heart of Backers again. We'll conclude this with what is Backers and how can we help small businesses across Canada or anywhere?
Exactly. So Backers is a online funding portal. We can facilitate private companies raising capital by selling shares, equity, stock in their business to everyday retail investors. They can raise up to $1.5 million. Investors can invest up to $2,500. We're currently regulated or registered in Ontario and BC for the startup crowdfunding exemption. That's Backers, the portal side, and obviously Backers, we've got the Connect side, which is a marketing agency, web tech development
readiness to help them get ready. If they're not ready to raise,
talk about this getting ready, the readiness, right? So we can work with you and get you ready to list your company on one of these exchanges or on our exchange, obviously, if you're very early stage, to get you ready to list and start to raise capital.
Justin, as an audit partner, when I worked as an audit partner, I helped companies go to London to raise funds. Justin is helping startups in Canada.
What was it? What PwC had the...
So Deloitte had... Deloitte, don't go to London without Deloitte. Don't go and raise funds without Backers. Literally.
Don't raise funds. Don't go to market.
If you're not backed, come to Backers. Yes. If you need backing... Right?
We'll throw out all our one-liners. What is it? Backing the unbacked?
We can help back the unbacked, right? Literally, if you're unbacked, the 97% that are not able to raise through VCs or seed or angel...
99.5.
Okay. Right?
Yeah,
we'll help you back. We'll help back the unbacked.
It's the first mile of funding. That's literally what it is. Our vision is that innovation will change the world for the better.
You have to prepare a pitch deck. You have to prepare a social media strategy, a marketing plan,
a community
build. You know, you cash flow forecast. Have you done
build
that?
out your MVP, all of that. Exactly. Yeah. Right. So, and then we talked about, the first mile of funding, sort of like the last mile of logistics, right? Yeah. This is the first mile of funding. So we've coined that phrase. We are the first mile of funding, really building, building out that,
Justin, we barely peeled back the onion. The onion here, we need to pull the onion layers apart and really show the, how many layers that we can help.
We're gonna do this daily, so we're gonna have lots of conversations. They probably won't be as hectic as today's and going off on various tangents. We want to kind of pick certain topics and really dive into them. I think tokenization is a huge one. I think understanding the opportunity for retail investors. I think the idea of loyalty. I think one of the things too is kind of breaking these myths around, it's costly to have too many people on your cap table.
My lawyer says I can't have more than 50 people.
Exactly, right? Well, right? Like all this stuff, right? It's kind of breaking through.
I have to keep my share registry at the lawyer's office. The books and records of account have to be at the lawyer's office.
It's got to be in a file folder, in a manila file folder. But yeah, so again, just to end it, our vision is that innovation will change the world for the better. And our mission is to facilitate innovation and innovators. So that's pretty much it. It's pretty specific or very broad, depending on how you look at it. Yeah. We are entrepreneurs ourselves. We've worked with many entrepreneurs and startups, both directly and
whether
indirectly.
You're a life sciences, whether you're a food and beverages, whether you've got a mattress company, whether you have a oil and gas startup, you're an engineering firm, or you're Streakers Gaming, we can help you.
B2B, B2C, B2B2C, whatever it is. If you have a need to have more customers, more clients, more users, more community, a greater community, more fans, and that's valuable to you. There is no better option. I mean, I've said this it flies in the face of a lot of people. I believe Backers is and will be, I think I froze there. I believe Backers, let me just get this. Let's get this. So I believe Backers is and will be the de facto or default starting place, at least, for early stage ventures to get funding and to build that community and build their business, that business in a box. The default. It will be the default as we evolve, as things evolve, the secondary trading, the liquidity and things like that we haven't even touched on this call, right, around private equity and the liquidity aspects will start to play out. And whether it's facilitating private companies and the liquidity of private company assets on the blockchain and trading of such amongst retail investors from a regulatory stance, we'll work on that. Or whether it's, them going public again on the Backers platform, which again, we are working towards longer term. Either of those options, I believe that Backers is and will be and will continue to be the default de facto place for every business, 100% of businesses to go out and get funding, whether it's from their community, the retail investors, whether it is from institutional investors, which can participate right alongside, just like they do in an IPO with the retail investors. Often they actually are the result of an IPO. It is the institutional or VCs. They all will be able to participate on the Backers platform. Backers will be the Amazon of selling products. The product is the equity. And equity, and I said this, all you accountants out there and CFAs, shout outs to my brother. The equity is the product they're selling, and it's a product they have an infinite amount of that they can mint or create at will, and they can sell it for whatever price the market is willing to pay for it. And that is a new product line that every business now has, and this is a way to do it. And there is no greater way than to support a business through such. And
perfect. How do they find you, Justin? How do they find you?
Backers.ca. Thanks, guys, for watching. And I will we'll leave it at that. But yeah, Backers.ca. We're going to be on here every day. We're going to go a little bit in depth, as we said, into other topics, other categories. Alan's going to talk a little bit about his expertise, accounting. I'd love to hear, I think tomorrow we should talk a little bit about what you've done and where you've come from and why, you're the guy that can step in and help them in various aspects of their business.
I will. We're going to go to the GLH 2000 hair book. Great looking hair 2000. Justin's got it. Great looking hair 2022.
I don't know. I don't know. I don't know why I'm growing it out, but it is getting a little outlandish.
You need to talk to.
It's the longest I've had it in probably 20 years. What's that?
Thanks, Justin. It's been great. All right.
It's been great. Everyone else, peace out. Justin Fox, Alan Wozni, thank you. And we're going to go one more with this. How about this one?
Got it.
Anyways, that was it. We were right there in an hour out. Right